Hey everybody, in today's video I want to talk about why you need two investing portfolios. And you're thinking, two, what are you talking about? Well, in our investing life, we have to think ultimately long term. If you want to be able to build up enough cash that your money generates enough income that you can have financial independence, that's not going to happen in 5 years or even really in 10 years. You look at more of a 15, 20-year time frame at the earliest. So you got to think long term. You need a long-term portfolio. However, there are some opportunities you can capture on the short term. So you also need a short-term portfolio. So what I want to do is talk a little bit about this two portfolio investment strategy and how you can execute it so you can hit your long-term goal of financial independence while taking advantage of short-term movements in the market. So let's talk about some facts here, which is it's very, very hard to become financially independent in 10 years or less unless you save up like 70 or 80% of your income and you have a high paying job. Then it is possible. There are people who do this sort of radical financial independence. However, that's not going to be the case for most people. For most people, it's going to require probably about 25 to 30 years of consistent saving and investing. However, if you do utilize a short-term portfolio strategy, you can cut down that time. I really think it's feasible that in a 20 to 25-year time frame, you can become financially independent with a combination of a long-term portfolio as well as a short-term portfolio. So what about the percentage here? You really want to have the majority of your money in a long-term portfolio. I prefer a 75-25 split, which is what I use. 75% of my money is in a long-term portfolio in the VTSAX, which is the Vanguard S&P 500. It's a low-cost index fund, very easy to use. It just basically models itself after the S&P 500 index. And then 25% is a short-term speculative portfolio. And for the short-term speculative portfolio, you can really take a couple of approaches. One is you can buy stocks that you feel in the next 3 to 5 years are going to rise and outperform the S&P 500. You could just buy speculative stocks. Or you can take that 25% and create like a long-short trading system where you find at this time of the year or this time of the week, certain markets will outperform the S&P 500, so you go long only during those times, and maybe you even see opportunities where a certain sector, a certain market will underperform the S&P 500, so therefore you short a long-short portfolio. You can either do either one for a short-term portfolio. It really depends on the kind of research you want to do. For stocks, you want to do a lot of research on a single stock before you buy that stock. So buying speculative stocks requires more research. If you want to do a trading system, all you really have to do is just find one system and back test it. Hopefully that system will be back tested long enough that you see how it performs during bull markets, during a bear market, and during a choppy market. So this video is taking place in 2018. You would want to find a system that is back tested at least to like the year 2000. It has an 18 to 20 year back test just to see how it's worked. The good thing is in the past 18 years we've seen every kind of market. We've seen bear markets, a crash market, choppy market, bull market. So for a trading system you want to go back over 18 years. I would caution that you do not want to have more than 50% of your money in any short-term portfolio trading strategy, just because short-term trading strategies, you can have drawdowns that are pretty extreme, more extreme than a long-term portfolio, and you could get shaken out of a trade. So you definitely want to keep, I would say at the most 25%. You really don't need that much more, and I believe that's enough an amount that will keep you comfortable and let you sleep at night. When you achieve financial independence, when you reach that point where you have enough money in your short-term and long-term portfolio that you can begin to pull income, usually about 4% per year, that you can relax off that money. Then you could take any excess money you have and put it into your short-term portfolio. And from there, you'll be fine. So using the two portfolio approach will allow you to reach financial independence quicker, take advantage of the long-term upward trend in the S&P market or whatever index you use, and then also with the short-term portfolio, take advantage of short-term trends. Okay, I hope you enjoyed the video. If you liked it, please like, share, and subscribe, and I'll see you in the next video. Bye.